First half results delivered in line with expectations in what's a really tough and challenging market, affected by geopolitical tensions in particular. We've seen lower volumes, but revenue for the first half is in line with the guidance that we set in June, and also our profitability and revenue guidance for the full year has been reiterated. Operationally, we've been making a lot of changes to how we run the business, which involves really strengthening how we manage things to adapt to mass production, anticipating future volumes will be much higher. So we made some management team changes, some board changes, and we've been implementing some new management controls and systems and processes that will really gear us towards that mass production. And that's useful progress that we can, of course, make in any market conditions that we face. On top of that, we've been qualifying with a number of customers, both in our Newport facility, but also elsewhere, including Taiwan. And we've released some recent announcement on those things, showing good progress for new revenue streams. And then from a financial point of view, we've strengthened our balance sheet and we've put in place a new debt facility, which really gives us the confidence that we don't need to do a short-term equity raise. So IQE is adapting already to the Asian supply chain shifts. We've really seen these happen quite rapidly. And given IQE's unique global footprint in the compound semiconductor industry, we've got manufacturing in the US, in Europe and in Asia. We're actually very well placed to adapt. And are immediately engaging with customers about forming new supply chains in Asia. Now, clearly that's disruptive to our short-term revenues, but over the medium term, we would expect that we'll have neutral market share and be well placed to actually take market share eventually. We've reached the end of what I would term the infrastructure phase of the capacity expansion. So we've built our mega foundry in Newport. We've also expanded in Taiwan by 40% and increased our GaN capacity in Massachusetts. And it's really the infrastructure phase that's the risky part in terms of building works and facilitization. So that's great to get out of the way. Now, CapEx spend going forward is much more discretionary, so it can be in line with market conditions, but also it's linear to the revenue opportunity. So as we see demand increase for compound semiconductors in the future, we can invest in more tools. But as I say, it is discretionary, so whilst the difficult market conditions continue, we can actually pull that right back to kind of maintenance levels of CapEx. Yeah, so in these market conditions, we're obviously exercising good cost control. We've talked about CapEx being discretionary, and we've supplemented that now with an increased debt facility, which gives us more headroom than we need, but ensures that we can continue to invest ahead of our cash generation if we need to. But I'm expecting that we'll be cash positive from an operating point of view in the second half, as we were in the first, and therefore we'll have significant headroom going forward. IQE is predominantly a fixed cost business. We're not a people-intensive business, and the capacity expansion that we've done gives us sufficient capacity with which to grow, but actually is a relatively underutilized estate at the moment. That means that we're spreading that larger fixed cost over a lower level of volume at the moment, which has a negative impact on our EBITDA margins. But correspondingly, as the volume comes, which you expect it will, then margin expansion can happen fairly rapidly as well. IQE has a fantastic opportunity ahead of it with big macro drivers such as 5G and connected devices coming down the line. Sometimes the timing of those revenue opportunities can be difficult to predict because we're dealing with new technologies here. But I'm very confident that we have tremendous opportunities in handsets with both 3D sensing and the front-end module side of things, in infrastructure with 5G base stations and so on, and then much broader connectivity and sensing applications going into the future. So whilst it is slightly hard to predict the short term, our medium term to long term growth looks really positive.